What are the type of indicators which you rely on for scalping?
All the growth what I have seen in the F&O markets is purely because of the open interest.
Can you decode something on open interest, because I'm also a fan of open interest?
If you look at these four quadrants and if you're able to get a clue, then you are almost getting there.
But how you decode them with VWAP and all that you said?
Okay, VWAP is the most important indicator after the open interest on the charts form. Why? I'm looking for a two candle theory.
Yes, I've heard a lot about your two candle theory. I even attended few of your seminars where you were showing about two candle theory.
What did I say about the parabolic SAR?
How do we identify that today Bank Nifty will move up by 1,000 points and something like that? Can we identify that?
So this is how I normally identify. Plus on the chart you can also look at it. What they normally do on the chart,
what are the type of indicators which you rely on or which you find are more relevant for scalping?
I think most of the subscribers by this time know that I'm a big fan, a fan of open interest. So the first and foremost,
Same here.
anyone who's playing in the F&O markets, and if they say, Shiva, I trade without the open interest, it sometimes amuses me. How come this is going to be the most critical component in the F&O space? And if they trade without the open interest, how is it even possible? All the growth what I have seen in the F&O markets is purely because of the open interest. And if I'm able to decode it, but it took me several years to understand how this open interest operates, how the moves happen based on the open interest. And once you see that, there is a period, right? People will say, when you see the charts, you will know what is going to be the next candle, the kind of move that you will see it. That exactly will happen when you get the confidence that this is exactly happened. Because market is a place wherein what are the things which has happened in the past, it will get repeated. And you will see the same old story, maybe like an old wine in a new bottle. And there are few indicators combining it with open interest like the VWAP, the super trend, and then the parabolic SAR, volume weighted moving average of 20. These are the simple indicators which I use.
Can you decode something on open interest, because I'm also a fan of open interest?
Okay, I'll just give you a simple open interest. When you talk about the open interest, there are four quadrants. How to identify where the buyers and sellers are. If you look at these four quadrants and if you're able to get a clue, then you are almost getting there.
Give that idea.
Yes. First one is a long build-up. What is a long build-up? When you see both the open interest and the price goes high from the previous day's close, because we are looking for the change in open interest. When both the open interest and the price goes high from the previous day's close, that is called as long build-up. What is a short build-up? When the open interest goes up from the previous day's close, price goes lower, that is called as short build-up. The third one, the short covering. In this scenario, the open interest goes down because the shorts are covering their position, and then the price literally shoots up, because when the shorts are in a fear, they wanted to exit it at any given price which is available in the market. So open interest goes down, price goes significantly higher, that is called as short covering. The last one, when you see it on the expiry day, the OTM strikes will have both the open interest and the price will go down. Normally, the OTM strikes are used for the hedging. So towards the end of the day, they just wanted to square off their position because they would have squared off other hedge positions as well. So in those scenarios, you'll see both open interest and price goes down, which is called as long unwinding. So as a buyer, you will be on 1 and 3, which is your long build-up and the short covering. As a seller, you will be on 2 and 4, which is your short build-up and long unwinding. So if you are able to identify which is that which is working for you and then going along with that particular area, I'm happy to be there as a long build-up guy or a short covering guy because I'm a buyer. So someone who's doing a selling, you needed to be part of that gang rather than if you're coming and trying your luck on the other side, then that is where you will get hit. Earlier, we never knew that. So when I started trading, I never knew about all this open interest, indicators or the quadrants and everything. I used to just go and take a trade when there is a heavy short build-up is happening. I thought that the price has fallen so much from 200 to 20 rupees. Now it has an opportunity to again go back from 20 to 100. I didn't realize there is plenty of open interest getting created. And it is like you're throwing your money into a pond. That is you're throwing a salt into the pond. What will happen? The salt will get dissolved. So whatever the money that I was throwing into the pond, it is keep on moving it lower and it is getting disappeared. So later on, I understood without the open interest knowledge, it's going to be very difficult to manage in the F&O space. That's when I started to decode in detail. So this is a simple one. But if you guys needed like a real story about this open interest and other thing, I have done a few courses with Upsurge.club, probably all these strategy videos, and I've also done some free courses as well.
But how you decode them with VWAP and all that you said?
Okay, so let me just quickly show a chart. So I told you that I'll be using simple indicator. So the bottom part, what you see is the open interest. This is available on the OI Pulse advanced chart. Then I showed you the RSI, 80 and 20. This is on 3-minute time frame, which we are looking at.
Okay.
Okay. Then comes your the indicators, the VWAP, the red line which you see here.
Yeah.
And then your WMA20, the blue line which you see here, the thin line.
Yeah.
Then your super trend, the setting is around 10-2. The multiplier.
10-2 you are taking.
Yes. This
because
is
by default it is 10-3.
No, 10-3. And some they will be using 7-3 or 9-3 and all. But what I have seen, 10-2 has given me significant results. When you're doing some backtesting and other thing, you will try with different multipliers. And what I have seen is 10-2 has given me almost a better success rate compared to others. And the OSPL signal and other things is the default one. And the parabolic SAR.
Okay.
Parabolic SAR is my weakest indicator just to identify whether there is going to be a long trend or the trend is going to be very small. So if you look at it, if the parabolic SAR very close to the indicator like in a candles, then it will be like in a weak one. I wouldn't normally like go on a long quantity, like in a large quantity. If it is going to be forming a big bar, big gap between the candle and this, then there is a possibility of market giving you a heavy move on that particular direction. Whenever you see the markets trading near to the VWAP, you normally won't get to see a big move happening. Okay, VWAP is the most important indicator after the open interest on the charts for me. Why? Because volume weighted average price, that is the area where both the buyer and seller will be fighting for. Imagine if you being a large player, your main like an average quantity would be, or the average price would be mostly on the VWAP area. So if it is going to be going far away, that means they are going to be losing money. They don't want to lose that. That's the reason somehow you will see the bulls coming back or bears coming back, bringing it near to this. Every other day, 99% you will see the markets, if it is on a sideways day, the markets comes and closes near to the VWAP. Why? Because both the buyer and seller on the futures market are saying, you and me made a good game today. On the futures, we are not making money, but in the options, we are making tons and tons of money. Because naturally, if they are going to be doing this, on that particular day, if you go historically seen the options, 90% of the time, both the options on call and the put would expire worthless. At the money strikes or like an OTM strikes, everything will expire worthless. So the biggest clue for any trader is, if the market is not moving with volume and if it is going to be staying closer to the VWAP, that particular day is going to be belonging to the sellers. Don't ever fight as a buyer. You're not going to win that market. You needed to wait, like this is yesterday's data. I'm just showing you the live market itself. Okay. You can clearly see the volume has not even there any 50K volume, because I normally look for 50K minimum on the Bank Nifty for me to consider that yes, the market is going to be moving in my direction or not. Just go and look at 1 day prior. See how the market has behaved when it is trading with a heavy volume. This particular day, you can clearly see the market has moved higher and lower with volume. Always, as a scalper or a buyer, try to play on this market. It will reward you well. It will reward you well to the core, and you will be able to enjoy it as well. In this market, you can clearly see, even though there are 1 or 2 candles, I'm looking for a 2 candle theory.
Yes, I've heard a lot about your 2 candle theory. I even attended few of your seminars where you were showing about 2 candle theory.
What did I say about the parabolic SAR?
When it is nearby and
nearby, you will not get the move, but if the gap is huge, you will get a large move.
Yes.
Can you see what has happened here?
Oh.
What is the gap here? There is a big gap between the parabolic SAR will be the first indicator which will give you a clue whether this rally is going to be a big one or a small one. This guy is forming big gap, and look at the rally it has happened after that.
So you are basically a buyer, as
yes,
I know.
Yes. Once the parabolic SAR giving me a clue. Next thing, you were asking about the 2 candle theory, right? I needed 2 consecutive bars of more than 50K, okay, in terms of the volume. In Bank Nifty, if it is the Nifty, I want 125K. This is on 3-minute time frame. Why this 50K and 125K? Earlier, it used to be 15K and 25K. But over the years, the volumes have increased significantly. You would have seen it. So even I had to revise it based on whatever the volume parameters and everything. Once I seen, whenever the market is making 250k bars or 125k bars, and if the move is happening in that direction, the bulls or the bears have taken the complete charge and they never let it down. Yes, there are days wherein it would have fall, but not at least out of 10 times, 7 to 8 times you will be on the winning side. Anything which is giving me a 7 to 8 per time winning ratio, that is like very good in this market. And most importantly, we are chasing where the big money is putting in the money. So naturally, we will be getting a higher and a better risk reward compared to other days. As per the two candle theory, what is the setup? You needed all the indicators to be below: the parabolic SAR, the WMA, the VWAP, and then the super trend. All are below. Once the two candles are getting formed with more than the volume, third candle will be my entry. But make sure that your RSI is between 50 and 75. And if it is above 75 or 80, then it is overbought territory. So the RSI need to be between 50 and 75, and all your indicators needed to be below. And look at the open interest, main, your queen. For me, that is the queen or the god. So look at the open interest. The open interest is clearly saying, I just explained you 4 quadrants, right? Price is moving up, OI is moving up. It is called as long build up. So once this parameters is done, I will either go buy the futures, buy a stock like an options, index options, or sell put options.
So, what type of options do you trade? At the money, out of the money, far OTM, or one or two legs near the ATM, or something like that?
I keep it very simple. I normally look for at the money and in the money.
Okay.
If it is going to be beginning of the series, say for example, today Bank Nifty expiry is done. Next day, if you are trading, I normally look for a delta of 0.5 and 0.6. But if you are looking on expiry day, that is on Tuesday or Wednesday. Tuesday is one day before the expiry. Wednesday is the actual expiry for the Bank Nifty. On those days, I look for a delta of 0.7 and 0.8. So when you're looking at ITM. So by default, when you're looking at it, those are going to be strikes which is there between 300 to 400 or 450 range. As a buyer, if you're going to be chasing your OTM, for me, it is like out of the market, not out of the money. It is out of the market. You will be thrown out of the market. The best is go for at the money. That will be your ATM, and make sure that you are in the ITM. In the money or at the money is better, but don't go deep inside ITM because you will not have liquidity. So choose a strike which is between 0.5 to 7, like in 3 or 4 days before the expiry. But on the day of the expiry or one day before the expiry, choose an the delta 0.7 and above. Don't go like in above 9, then it will be like in too deep in the money.
How do we identify that today Bank Nifty will move up by 1,000 points and something like that? Can we identify that?
We may not be able to identify beginning of the day unless and until there is a massive news which is coming in. The news sometimes makes the move. Okay. Apart from the news, what else we can identify? How we can identify? Yes, that we may not be able to identify right at 9:15.
No, but maybe around 11, 12,
yes,
1 o'clock,
10:30, 11. Yes, 10:30, 11, it would clearly give you the clue. Okay, how do we do that? It's about the market giving you a clear move in terms of the open interest that is getting created. I'll just open up the trending OI data. This will give you like a clue. This is the data for yesterday on the trending OI. This we are showing it in 60-minute time frame. I'll just show you for 2 days positional data as well, so that you will get to know how the things played one day before and after that. This is on the expiry day. Whenever you see the open interest getting added on both the sides, can you see here 9:30? The open interest is almost building up on both the sides, 1 crore, 1.3 crore, 3 crore and 2 crore. That means the open interest is steadily building up on both the sides. The writers are creating positions on both the sides. When the open interest is going higher, that means he says, Shiva, we as a writer, we are under control. We will be able to control the prices, because even if you are trying to take the markets higher, we will put some quantity and then pull down the prices. That's the clear clue. But on a trending day, if you go and look at this trending OI data, one side the open interest will be keep on going down. On the other side, the open interest will be keep on going higher. The clear clue is open interest on one side will be, say for example, today morning we have 1 lakh quantity, 1 lakh quantity, open interest, both the sides. 9:15, it will come to 80, it will go to 1.4. 60, 2. 40, 2.5. As it is going lower, that is a clear sign that the sellers are saying this market is going to be absolutely brutal. It is going to keep on moving higher. Let me start to cover my position. And they will not only cover the position on one side, just to make money, they will start creating the positions on the other side in terms of the OTMs, in the money and at the money, everything on the put side. Plus a fresh clue. There will be a period, say for example, around 12:31. There are no fresh open interest additions is happening on either side. Then that means the rally is coming to a standstill. Or if they are starting to add more positions on the call side, then that means they are going to do a profit booking at these levels. So the clear clue can be identified from the open interest itself. So this is how I normally identify. Plus on the chart, you can also look at it. What they normally do on the chart, you will see the super trend, all the indicators which I use, right? Several times they come hit the table and then keep on moving. But when it is a trending move, it will be like this. Once the fall started, the whole day, they will never ever go and touch the super trend or the VWAP, never ever. And they will make a new high or a new low every hour to 30 minutes to hour. So that is also a sign that every hour someone is coming and pumping in the funds of 500 crores or 1000 crore to take the index lower. And that is also another clue. So these are the two things which I normally watch to identify whether it is going to be a trending day or whether it is going to be a sideways day. And plus, you can also watch the IV data as well. If the trending day is there on that particular direction, the IVs will keep on rising because the buyers will be coming and buying it. On the other side, the IVs will keep on falling. Normally, there will be a 10-point difference between the call IV and the put IV from at the money strikes. So, if you can watch all this, I'm pretty sure over a period of time, when you keep on observing the markets, you will be able to see, yes, this is how the trending move happens.
So, friends, this is the reason when I sit with them, even just one word or one line can give extra edge to my trading.